Where's the stock market going to be 12 months from now? Goldman Sachs, obviously smart folks, a lot of CFAs, a lot of financial professionals, they came out with their projection of where the market's going to be. I got that and my perspective coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, here we go. We've been through the craziness of 2020. Where's the market going to be in 12 months? Where will the stock market be in 12 months? We're getting close to the end of the year. We're going to start getting lots of these predictions, and we got one from probably the biggest name in finance just yesterday. Goldman Sachs came out, released their projection of where the stock market will be 12 months from now. What do you think? What they are showing here is a 21% increase in the market 12 months from now. Look at those levels. The S&P 500, which you know is the 500 largest stocks in the U.S., so those are large cap U.S. stocks, going from 3,500 to 4,300 12 months from now. That's a 21% increase price return. Total return, 23% increase. Even Europe, they've got double-digit returns. I mean, look at that, 15% and 21% in U.S. dollars. 18% increase for the Pacific and Pacific Rim and Asia and all of that. Those are astounding predictions. Astounding forecasts. So I like it. I mean, that makes me feel good. Should we believe it? What's my prediction? What's your prediction? Well, let me show you another chart here. This additional chart, this is one I'm showing most clients as I meet with them. What this is research done by JP Chase, and it's showing the PE ratio, which is the price to earnings ratio of the stock market, and then what the 1 year on the left, what the 1 year return is. So what the return is 1 year from now based on the price to earnings ratio. Now this is historical data. So this is actual randomness 1 year returns. Do you see any correlation there? Do you see any connection there? No. The 1 year return it's all over the place. It's all over the place. Predicting where the market's going to be in 1 year is like predicting where a leaf will travel in a hurricane. It's impossible to know. It's impossible to know. The future is still unpredictable. So I appreciate the analysis by the great folks over at Goldman Sachs to tell us that the stock market's going to go up 21% in real terms, 23% total in the next 12 months. And I hope that's true. It is very possible, maybe even probable. This is their guess, because look at the randomness of 1 year returns. Now, let's move forward to another chart here. I'm going to click forward here. This is another chart that is from JP Chase. It's one of my favorites. I don't share often with clients, but it's a great, healthy reminder. What this is going back over the past, 40 years of annual stock market returns for each year. That's the bar. That's the bar, is what the stock market, the S&P 500 return, what the return was for that year. Of those 40 years, 30 of them were positive. That's awesome, right? So that good probability that we're going to have positive years each year. 3 out of 4 years are going to be positive in the market. That's what history says over the past 40 years. What are those red dots? Those red dots are the intra-year drawdowns during the year. Meaning, even in great years, the investments, the stock market, from a peak to a trough, from a high point to a low point, is going to travel that much. The average, guys, is a drop of almost 14% a year. 14% a year. Therefore, that's the average deviation of returns. So for Goldman Sachs or for JP Morgan or for anyone, Bank of America, I think, came out with their prediction for a year from now, and I will just tell you, I'm not going to show that chart, but it was, here's what's happened this year, here's what we project moving forward. Like, it's just a continuation, because that's typically what economists or anyone that is giving their prediction on the market where it will be, they just sort of extend out what's been happening right now, because we can't tell what's going to throw a wrench in it. So we just assume we'll just keep on the same track. And right now, this track is money printing and stimulating and post-pandemic, we're almost post-pandemic, splurging. And so, yeah, it's probably going to keep going up a ton. Guys, as the first chart, it's completely random, the 1 year return, completely random. And in any given year, we're likely to see a 14% drawdown, a 14% swing. So if Goldman Sachs thinks the market's going to be up 23%, there's a good chance at some point next year it's going to be down 14. There is a good chance of that. So the point here is, don't base your investment philosophy on where you think the markets will be in the next year, because it is absolutely random. It absolutely is. Don't base your financial actions on where the market might be over the next year. You need to make your investment and financial decisions based on your overall long-term financial plan. This is not me lecturing you, telling you, doesn't matter what the markets do in 1 year, think long-term. That is true, but yes, think long-term in connection to your financial plan. Because if you are going to be spending money, you're in retirement or you're approaching retirement, you're going to be spending money in the next 1 or 2 years, this randomness of returns could really hurt you. It really, really could. So those dollars you might want to have in low risk. The medium-term dollars, the long-term dollars, you might want to have positioned differently, and just set your expectations that this could be all over the board. The other reason why I would tell you, if you needed more evidence as to why I would tell you, the folks that give 1 year predictions in the market, you would almost argue are very, very intelligent fools, or very, very intelligent individuals that are trying to get you to clickbait or something like that, is because of what's happened in 2020. No one's 2019 prediction of what 2020 was going to be like would have said, we're going to have a global pandemic and stocks would reach all-time highs. We'd have panic buying. No one. Well, did you see it? I didn't see it. So, and you might say, well, but 2020 is like the worst year ever and this is so random. The future's always uncertain. I have no idea what's going to happen tomorrow. So that means 1 year return projections are as useless as that, okay? But let's go back to that chart of PE ratios and annualized returns. On the left, that's 1 year returns, totally random. On the right, that's 5 year annualized returns. Look at how consistent that is. And right now, it's showing what I've been saying is that, hey, I'm not saying the market's gonna crash, but the market is high. It's expensive right now. Over the next 5 years, we shouldn't be surprised if the market is still in a similar spot as where it is right now. We shouldn't be surprised. We shouldn't bet on that, but we shouldn't be surprised. Therefore, you've got to be diversified. You've got to be taking steps in your financial life to make sure that you're staying on track, even if the next 5 years aren't as boisterous in the market as the last 5 years have been. Work with your certified financial planner. If you don't have one, you can always contact a member of my team. You can find us online, Korhorn.com, that's Korhorn with a K, or wisemoneyshow.com. You can find us there as well. Or as always, for a second opinion or to reach out or connect with us, you can send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.